So, if you understand liquidity, but you still struggle to find clean entries, this is what you're missing. Now, in the last videos, we talked about market structure and liquidity. Now we're adding one more piece to make your entries more precise. That piece is called a fair value gap. Now, you might also hear fair value gaps get referred to as inefficiencies or imbalances. They both mean fair value gaps. It's just, for some reason, people call them different things. But yeah, so how a fair value gap forms is by when price moves quickly in one direction and leaves an imbalance, so a big candle of orders behind it. It's a 3-candle formation with the gap between the wick of candle 1 and candle 3 being the fair value gap. So fair value gaps are powerful because price moves so fast that it doesn't trade efficiently through that area, and because of that, price often comes back to fill that gap later. So if we look here at an example of a bullish fair value gap, right here, as you can see from wick 1 on the first candle, this is the third candle, so the wick there. In that gap, there's this big body. Now this big body in between this line and this line of the wicks, this right here is the fair value gap. So what usually happens, price will be up here, it will trade down into this gap and then continue up. It comes down in here to fill those orders and carry on moving upwards. This is a valid fair value gap. This is invalid because, as you can see, the wicks overlap. In this example, the wicks don't. They leave this big gap in the middle, and here they're overlapping. So there's no gap between those wicks. That's what a fair value gap is a gap between the wicks, leaving a big gap in the candle for price to return to. So it's the same on the bearish example. There's a wick, and a big body here where price can return up into, continue trading down. Invalid is here because, again, the wicks, they overlap, and this doesn't allow any room for price to return into. So this is an invalid gap, this is valid, invalid, valid. Now, this is important because instead of chasing price, you can wait for price to return to these areas and get your entry. So price can come down, fill this imbalance of orders, and continue upwards. So let's look at a real chart example now because it's a lot easier to see. Now again, fair value gaps, they're not perfect. Not every fair value gap is going to play out, but fair value gaps are incredibly powerful. If you can read the structure and you can read where price wants to go, you can use fair value gaps to find your entry point. Now, if we look here on the 15-minute time frame, what can we see? Okay. Okay, so for example, we have an area of liquidity up here. And price is up here, it trades down, and as you can see, this right here is a fair value gap. Wick, and then there's this huge body left in the middle where price can trade into. So we mark this out with a rectangle tool. As you can see, price comes down, hits this fair value gap, and continues trading higher. Right here on this candle, it breaks structure, and then it goes and takes out this area of liquidity. That's literally a model, and it covers everything we learned. Liquidity here, break of structure here, and now fair value gap. Now with fair value gaps, obviously some of them can get disrespected. A disrespected fair value gap is if the body was to close below the gap. So for example here, this is also a valid fair value gap. Why? wick, wick, and then there's this massive body in the middle. As price comes down, as you can see, it wicks through it, but the bodies stay within the fair value gap. Break structure, trades higher. It's a pretty simple concept. The best way to get better at it is to just go back in your charts and find some examples of it, mark them out, and you'll see. So this is a bearish example right here. As you can see, wick here, top of this wick here, the whole of this body then becomes a fair value gap. Price comes up, respects it, and moves down. And like I said, not all of them are going to work. For example, this right here is a fair value gap. The price comes up, trades through it. And what does it trade into? A different fair value gap with this candle and this candle, and then it trades off. So not every fair value gap is going to work, but you need to have structure and liquidity to target, and we can use this as the start of an entry. Now again, with all of these concepts which I will teach, the higher time frame holds higher power. So these concepts are more likely to work on the higher time frames. So for example, here again, another example, fair value gap, trades into it, trades down. 4 hour, it's going to be the same scenario. You'll find fair value gaps here, for example. Look at this. Price comes and trades into it 3 times, and it respects it every single time. But also look at what price does here. It engineers liquidity, relative equal lows. Price sweeps it out. We spoke about this being a really good draw, relative equal lows. It comes down, sweeps it out, and then moves higher. So hopefully by now you understand what fair value gaps are, because if you look at this move, price comes down, sweeps it, pushes up aggressively. So what is a fair value gap? It's just a gap between the wicks in the candles. It's a 3-candle formation. Now combine this with what we learned before, price takes liquidity down here, comes into the fair value gap, and then moves. And that is what the market moves for. It moves for liquidity and to rebalance to fair value gaps. So when the price does return to fair value gaps, that is when you can start thinking about your entries. So if you take one thing from this video, just please note that entries form within fair value gaps, not at the top, not by chasing the move, but after the pullback into that gap. So don't chase price, wait for it to return to areas where it moved away from too quickly, because that's where price will return to. And that is where the better entries are found, as you can see here. So in the next video, we'll break down order blocks and how they combine with everything you've learned so far. And again, this is where you can start to put things together.